The last 2 summers have seen a decline in volume on the Bitcoin market. Historically, this period is a low trading time for the crypto, with volumes usually picking up in the fourth quarter. This summer has been no exception. During this period, volume has been down by 43.5% and 14.0% on BTC spot exchanges. However, despite these declines, Bitcoin prices still increased by 33.1% and fell by 32.6%. Volumes were down in July compared to last summer. Volumes remained low during this period, with the weekly average of $3 billion being less than mid-December 2020. A lack of volume may be an indication that money managers are de-risking their portfolios. Recent market movements and macroeconomic worries may have contributed to this trend. It's not surprising that volumes would be down in this period, given the recent market volatility. Last week, crypto investment products saw minor outflows, while volumes fell to the second lowest levels of the year. This was the third consecutive week of outflows for Bitcoin and Ether investment products. Minor outflows also occurred on multi-asset investment products and funds with direct exposure to Solana. In addition, Ether and cryptocurrency exchanges saw small weekly inflows of $2.9 million and $1.9 million. In the last 2 summers, Bitcoin prices have fallen during the summer and are likely to do so again. The most likely trigger for this downfall is fears of a recession. During the last 2 summers for the Bitcoin market, volumes were down by up to a third. The price of Bitcoin fell by 32.1% and was down by over 30% in 2021. A low trading volume is a sign that few holders are actively moving coins. Historically, big price moves require a large amount of trading activity on the Bitcoin network. As a result, recent sharp price trends have come and gone, only to die when the volume did not respond to the price change. The Bitcoin market has had a tough month. Prices dropped more than 0.5% in August after hitting a record high at $24,000 last week. But a slew of events contributed to a rebound, which brought the cryptocurrency back to more than $68,000. The fall followed China's ban on cryptocurrency transactions and the closing of foreign websites that serve Chinese traders. The price of Bitcoin rose quickly in 2017, as more people tried to get their hands on a piece of digital currency. By December of that year, it was up 50%. Then it bounced between $6,000 and $8,000 before closing the year at $3,709, a price that has remained relatively flat over the past year. However, today's sell-off could push Bitcoin prices back to June levels. Global geopolitical tensions are also driving downward pressure on crypto. Rising geopolitical tensions between China and the US are not going to support risk appetite anytime soon. As a result, a dip in the price of cryptocurrencies is likely to occur in the near future. While the Bitcoin market remains volatile, many experts predict a bright future for the digital currency. While a decline in prices in August might seem like a blip in the market, experts are predicting a bright future for the digital currency. With more businesses and institutions adopting cryptocurrency, the value of Bitcoin could stabilize. The September price drop follows a cruel summer for the Bitcoin market. As the consumer price index dropped to 8.5% in July, speculations were growing that the Federal Reserve would loosen monetary policy. Though Bitcoin and the S&P 500 recovered some losses, the recovery was small. Some analysts are worried that the recovery may be a bull trap, a situation in which an investor thinks the market has bottomed out, but later realizes that the market has gone back down. While a hike is not yet inevitable, the recent trends indicate that the Fed will likely raise interest rates by 75 basis points in September to slow down the economy and keep inflation at 2%. As a result, the S&P 500 and Bitcoin are both at risk of continuing the correction trend. If Bitcoin breaks out of its current bear flag pattern in September, it will likely decline toward $19,250. The daily chart also shows a bearish continuation pattern. The Bitcoin merge is a highly anticipated event, which traders are closely watching. A recent report by trading platform Deribit Exchange shows a large number of calls compared to puts, and the open interest on options contracts has almost quadrupled over the past year. The vast majority of contracts are dated September, which indicates that many options traders are expecting a price spike after the merge. Traders are looking at various hedging strategies, including call spreads and strangles. The merge is not without risks. The price of Ether has plummeted by 75% since its all-time high in November, but this downturn has given some investors an opportunity to profit. Additionally, Ethereum's massive software update is expected to make the network faster and more efficient, but its exact timeline remains unclear, especially after multiple delays. Although the Bitcoin merge is likely to have short-term effects, investors should consider macroeconomic factors and government regulations when making predictions about the price of cryptocurrencies. For example, cryptocurrency hasn't proven to be an effective inflation hedge, and many cryptocurrencies have begun to move in tandem with other high-risk assets, such as stocks. The Ethereum merge is another storyline that traders are closely monitoring. A major shift in the system is expected to take place in the next few weeks. This merger is expected to replace the proof of work and proof of stake systems. This event has sparked a significant amount of interest in the cryptocurrency, and Wall Street has taken note. In fact, the options market for ETH is already seeing interest from institutional investors. These investors are betting that ETH will double by September 30th, a key date. Ethereum has already fallen below the $1,500 mark prior to the merge, as whales have been moving assets. Other factors contributing to the decline in Ethereum prices include the Fed's hawkish stance on inflation and an increase in oil prices. In addition, Ethereum saw $2.6 billion of options expire on August 26, and the liquidations caused prices to plunge below $1,600. Ethereum's future is uncertain, and many exchanges may suspend Ethereum transactions before the merge. Ethereum miners are likely to dump their tokens before the merge, as well. The merge is an important event in the cryptocurrency world, as it will transform the blockchain that powers Bitcoin into the Ethereum blockchain. This change will drastically improve transaction speed and reduce the impact on the environment.